Hello and welcome to the Spark Accounting Solutions show. My name is Jenny Q. I am here with Julie Babcock-Hyde. Julie is the CEO and founder of Spark Accounting Solutions. She's also a CPA, CFM, Profit First Professional, QuickBooks ProAdvisor. And today we are going to talk about the 5 things home service businesses should consider in your 2020 plan. Home services businesses. That's a mouthful, Julie.
It is a mouthful, and they don't really have a good name because some people call them field services. Some people, like in Australia, they call them tradies usually.
Okay.
So they've shortened it to something a little bit easier to deal with. But we don't have a good name for it in the
Well,
United
give us an
States.
example of what a home services business is.
Lawn care, carpet cleaning, fertilization. It can be plumbers, it can be appliance repair, it can be anybody that's pretty much driving around in a truck all day long from job to job,
Okay.
to somebody's house to fix something for them.
To provide a service of repair.
Yeah, generally
Okay.
repair.
Okay. All right. Fair enough. And so we're going to talk about what these business owners should consider in their 2020 plan. Now, here's my question.
Yes.
What we're going to talk about applicable to other businesses as well?
Absolutely. This can apply to everybody, but we're going to give some specific examples related to the home service industry. So if you're listening to this and you're not in that industry, you might have to tweak it just a little bit to have the examples make sense for you. But everything that we're talking about today applies to all businesses. It is that time of year. It's holiday season, which means if you haven't started your plans for next year, it's a good time to do that. And it's really important to have a solid plan so you know where you want to go next year.
Makes perfect sense. What's our number one step?
Number one step, and this is the one that almost everybody at least gets started with, is trying to figure out what your revenue target is for next year.
Okay.
And you're going to find out that I've broken this into 2 different pieces, because a lot of people, when they think about revenue targets and they're saying, okay, we're going to have 20% growth, or we're going to have 10% growth, or we're going to have 100% growth, or whatever that number is that you're looking for next year, most people only think about all the new business that they need to add in. So step 1 of revenue targets that I want everybody to think about is, how do you get more out of your existing customer base? And so there's a few different things that you really want to think about. And the first one is really, gosh, when's the last time you did a price increase? We all know that our costs are going up. My costs go up all the time. I'm sure your costs go up. Just the cost of living, groceries goes up, gas goes up, all of that goes up, and our team members want raises. Health insurance costs go up. All of these things go up. And if we don't boost our prices to go along with that, that can be a source of revenue that we are passing on. Most clients are not as, they're not as price sensitive as we think that they are.
Okay.
And so really look at this and say, when's the last time I did a price increase? And also think about, is this something that I should actually have built into my contracts, so that people know that every year, on January 1st, we do an across the board 3% price increase, 5% price increase, or whatever, just so people know to expect it and it's not a surprise. So number 1, when you're looking at your existing customer base, is look at your prices. The second one that I like people to think about when you're looking at your existing customer base is, are you really taking advantage of all your cross-selling opportunities? Which clients are not taking advantage of all of the services you're providing, and do you have an opportunity to pitch that to them? Do they have a need for it? For example, there are companies that do carpet cleaning and dryer vent cleaning and grout and tile cleaning. That's 3 different service lines. And your customer may think of you in your head as, that's my carpet cleaner. And so when they need those other services, they may not even think of you. And so reaching out to those people and letting them know about the different services you offer, seeing if there's something else that they need, is a really good way to get additional revenue from people that already know you, they already pay you, they already trust you,
Right.
Hopefully they like you too. But those are the easiest people to sell to. So make sure you're taking advantage of cross-selling opportunities to your current customer base as you're factoring in that revenue plan and really evaluating, okay, we do mowing for all these clients, but we don't do fertilizer for them. Is there an opportunity to add on fertilizer? And reach out to those people and start figuring out who you can add that on to as you're figuring out your plans for the next year.
That's a great idea. Is this the same thing or different thing than upselling when you're at the location?
You know what? In my head, they're all kind of the same.
Okay.
For this analysis, a lot of times these are customers that you've had for years that have you in, like, everybody talks about the friend zone. You're just in the friend zone. You're in the lawn care only zone. You're not in the fertilizer zone.
Okay.
You're not in the bug control zone. You're not in some of these other services that you offer. And so you may have had a chance to upsell them when you originally talked to them, but now it's just an opportunity of reintroducing, here's the other things we can do for you.
Excellent. Okay. I love it. Perfect.
Okay. So the next thing I want you to think about when you're looking at your current customer base and seeing if there's opportunities, I'm going to give an example of, we're going to go back to lawn care, fertilizer, bug control. Sometimes in certain locations, it makes sense to do only 4 treatments a year. Sometimes it makes 5 treatments a year. Some of the companies are now coming out with the special, put your lawn to bed treatment for the fall. Do any of those additional services make sense to offer to your clients? And should you add a service into your standard package? Now, that's very lawn care related, but you can see how this would apply to other things, even with, even accounting, even with coaching, even, all of these different industries. You can say, is there a service that I offer that I could add one thing onto and get one more visit a year, or one more paid consult a year? Because there's a lot of times that if our clients really need that and they see the value in it, they're going to be happy again to pay us. They know us, they like us, they're already paying us. They don't have to find somebody new. So that's another way to really get the most out of your current customer base as you're thinking about where's your revenue growth going to come from.
Love it. Really good. Really good. All right. So we have revenue targets. That's where everybody starts. And then that's number 1. So what's number 2?
Number 2 is, okay, so we talked about getting the most out of your current customer base as you're figuring out how you're going to meet your revenue targets. Then once you've figured that out, now you got to think about how are you going to add new customers to make up the rest of that target goal. Okay. And so it's really important for you to think about what's worked for you in the past. Now, a lot of companies don't do a great job of tracking where their referrals are coming from, or tracking where their leads are coming from. They don't do a great job of that. And so if that's you right now, one of the things I want you to put in your 2020 plan is to start tracking your lead sources, because that is so powerful as you're thinking about adding new customers. What in your marketing is actually working for you? If you don't track that, you don't know, and you can't make good decisions about advertising. So if you have that data, look back to that data, see what's working, and figure out, do I need to focus on Google ads? Do I need to focus on radio ads? Do I need to focus on TV ads? Do I need to have a refer a friend campaign, because most of my business is coming in through referrals? Look at what's been working. If you don't know what's been working, again, you're going to have to pick some methods to attract new clients. You're just going to have to try something and know that this year is the year you're going to gather data and find out what's really working and not working.
I love that.
Yeah, there are obviously lower and higher cost ways of adding new customers. A referral is a really low cost way of adding a new customer, because it's coming from somebody that knows you, likes you, trusts you, and their friend is looking for whatever you do, and they're saying, hey, go to these guys, they take good care of me. That's going to be an easier sale to close than somebody who's never heard of you before. So make sure you look at your options, look at how much money you have to invest, and really evaluate, if you have the data, what's worked. If you don't have the data, let's get it this year.
Okay, absolutely. Start where you are with what you have.
Exactly. If you don't have the data, it's all you can do is commit to getting it this next year.
Perfect. That's a good goal. That's a really good goal, because that's a whole new process to put into place into your business.
Yep. And remember, last month we talked about tags in Jobber.
Yes.
As just an example, that would be one place where you could start storing your lead sources.
Absolutely. Perfect.
So,
okay.
Something to think about.
So we had number 1, revenue targets, number 2, revenue targets, but adding new clients. And then number 3.
Number 3, you've got to take some time to evaluate what your needs are going to be with this growth. A lot of times as you're planning for revenue, a lot of people, I'm not going to say they forget, but they don't go far enough in their thought process to figure out, okay, if I add this many new customers, when do I need a new employee? When do I need another truck? When do I need another van? When do I need another lawnmower? And so really thinking about, that equipment and employee needs that you're going to need as you grow is really important. And don't wing it. Have an idea, because we all know that the second that you place a want ad, a help wanted ad, you don't have an employee the next day. If you find somebody good, they've already got another job and they're going to want to give at least 2 weeks notice, and you've got to have time to interview them. And if you're in the middle of your busiest season, you might not have a ton of time to interview. So you want to really think ahead and say, okay, when we've added 20 new clients, when we've added 40 new clients, when we've added 60 new clients, that's when I need a new person starting, so that you can track and watch that and say, okay, I'm at 40 right now and I need a new person at 60. So I should probably start interviewing. I should probably put that help wanted ad out and start thinking about that. Same thing with vehicles. Know when you're going to need to add one to your fleet, but also think about what might be dying soon, because equipment and vehicles, they do run out eventually. They aren't going to last forever. And so thinking about what big preventative maintenance projects needs to be done, what big repairs need to be done, and making sure you have a plan for all of that stuff in your forecast for 2020 is really critical.
Now, if I'm totally throwing this off, just shut me down right now.
Okay.
But my question is, as a business owner, as we get to the end of the year, my thoughts are, I want to make sure that I'm, taking every opportunity to check on my equipment, check on my tools, check on everything. Is this a good time to buy those before the end of the year and reporting for income?
Yeah, I always I always encourage people not to spend $1 to save 33 cents.
Yes, I have heard you say that.
I'm sure that you have. However, if you do need a new vehicle, there are advantages to deducting equipment and vehicles as long as you get the right ones. So depending on what you're thinking about buying, if you're thinking about buying a $40,000 truck, make sure you talk to your accountant and that you're going to get the tax benefits that you think you're going to get out of it.
Ooh, yes.
Especially if the primary purpose at the timing of that purchase is for tax benefits. Make sure you buy the right thing. The vehicles have a lot of special depreciation rules about them. We're not going to go into those today, but my message to everybody is, if you think you're going to buy equipment this year to save on taxes, make sure you run it past your accountant.
Really, really useful tips. Thank you for humoring by answering that question. Okay. Are we ready to go to number 4?
We are ready to go to number 4.
Okay, perfect. So number 4 is something that's useful all of the time, but especially when you're projecting and planning for the coming year. And that is evaluate your expenses.
It is so easy. And I say this all the time. It is so easy to sign up for things, have recurring payments coming out of our accounts every month, and forget that they're there. Forget that they're happening. And so when you're evaluating your expenses and you're projecting out your expenses, I encourage everybody to, if you've ever heard the concept of, a zero budget, you start with zero and build from there. I encourage everybody to do that and really look at, maybe don't start from zero, but really look at, here's what I don't just say, okay, I'm going to do 10% more than last year. If I'm doing 10% more sales, I'm going to do 10% more expenses. That's not a good way to go, because you've assumed that you're going to need more of things that you may not need more of, and you're likely to spend the money whether you need it or not. So I just encourage everybody to really go through what they're spending money on now. Are there things in there that you're spending money on that you don't need? Are there memberships, dues, and subscriptions that are coming out every month that you pay for that you're maybe not getting the value out of? And then you need to also think about, what about raises? What about benefits for your team? What other expenses do you have that are going to be changing and fluctuating? One of the things I'll talk about on the topic of insurance that catches a lot of people off guard is, depending on your general liability policy, there can be factors like revenue and payroll. If those increase, your costs are going to increase, and you need to factor that in. You can't just use the same as last year. If your revenue is going to grow 10% and their rates are going up 10%, you have to factor both of those things into your cost projections so you don't get surprised when that bill comes due. Workers' comp is kind of the same thing. Most workers' comp policies bill on an estimated payroll level at the beginning of the policy period, and then at the end of the policy period, they do a premium audit. And most people, when they hear audit, they're like, oh my gosh, it's a horrible thing. With workers' comp, it's just a standard thing. With liability accounts, insurance, it can be as well. But they basically are coming back and they're saying, our original policy was based on an estimate, and now we need to know what your actual is so that we can bill you the real amount. So just think of that as like, as somebody coming out to read the gas meter at the end of the month to know how much you really used, okay? But so those happen. So if your payroll's going to go up because your sales are going to go up and you need more employees, you want to make sure you factored that rate in as well, because likely your workers' comp rate's going to change, and if your payroll changes as well, you're going to have, an effect on the total expense for both of those when you're looking at projections.
This is where a CPA comes in handy.
It is really nice to have somebody to work through forecasts with you.
Yes.
It's one of our favorite things to do with our clients this time of year, because we also help them, number 5.
Let's just move right on to it.
Figure out what their plan is to be profitable. Again, I'm a profit first professional. I'm going to tell you to plan for your profit first. I'm going to tell you all these things. This is really important. You want to make sure as you're going through this budget and forecast process that you're going to hit your target profitability. If your target profitability is 5% or 10% or 15%, whatever it is, this is your chance to design your year next year so that you can meet that. You're going to take it out up front anyway as you go through the year. But if you don't have a plan for how you're going to make the cash flow work, it's probably not going to turn out as good as you think it's going to. So this is your opportunity to really get that roadmap. Now, if you don't know what I'm talking about, when I talk about profit first, I see Jennifer just put the link down there for the core chapters of the book, Profit First. Yeah. And would love to have you hop in and grab it.
Yeah, absolutely. And it's just a simple free download, and it will all now, and then everything that Julie just shared with you will magically make sense after you read that. Right?
Well, you get the basics of profit first.
Yeah.
And that's important, because I think just understanding, like, if you really want to switch from being not profitable to being profitable, this is a great tool that you can use to get yourself where you want to go for 2020 and actually have money in the bank at the end of the year instead of spending it all. So
good.
Yeah, it's so critical to have this kind of plan. I think we all know, like in our personal lives, if we just kind of wing it and don't have a plan with what we're going to do with our money, it doesn't always work out for us exactly like we want it to. Kind of like with retirement savings. If we just wing it and you don't ever do a check-in with your financial advisor, just say, hey, you guys are going to need to bump it up a little bit, or you guys are good. You want to know that you're on track for, where you're headed to. And so having the plan for 2020 is so critical. Really sitting down and spending some time and saying, here's my revenue goal. Here's how I'm going to get there. Here's my expenses. Here's the new equipment I need. Having a really solid roadmap for where you need to go for the year is great. And then you can kind of track and see if you're getting off track. You can do some course corrections and make sure you end up where you want to be for 2020.
So good, Julie. So good. If someone has a question for you after watching this, what's the best way to contact you?
The easiest way to contact us is on our Facebook page. We have a contact us button. Feel free to click that, and that will come directly to me, and we will have somebody reach out to you so that we can chat about what your questions are.
Excellent. Perfect. Thank you for the information, and everybody, happy Thanksgiving, and just let's go crush 2020.
That sounds amazing. Let's do it.
Okay. Bye, Julie. Thank you.
Bye-bye.